You may have seen headlines about altcoins and crypto-related stocks rallying, which can make you wonder, is the entire crypto market about to take off? In this latest development, the big news is a 90-day pause on tariffs, originally imposed by former President Trump, an action that seems to have temporarily eased U.S.-China trade tensions. Investors reacted enthusiastically, pouring money into altcoins and crypto stocks, pushing prices higher almost overnight. However, the real focus should be on Bitcoin's underlying power. The current 90-day tariff suspension could be more than just a short-lived hype cycle. According to insider information, many large institutional investors are betting that if U.S.-China tensions flare up again, Bitcoin will emerge as the go-to safe haven. In other words, even though altcoins may be stealing the spotlight with their rapid price movements, Bitcoin could hold far greater upside over the long term. Here at this channel, we employ AI to sift through news outlets, social media discussions, and on-chain data to uncover hidden market trends. We asked ourselves, why is a mere 90-day tariff suspension causing such a market frenzy? And discovered strong indications that major investors may be accumulating Bitcoin behind the scenes. We're even entertaining a bold hypothesis: while altcoins appear to be the main attraction right now, Bitcoin could ultimately become the biggest winner. In the next segment, we'll explain why Bitcoin is poised for a potential major bull run. No matter how hot altcoins appear in the short term, factors such as U.S. monetary policy, inflation concerns, and shifts in the U.S.-China relationship all play crucial roles. Rather than focusing solely on day-to-day price swings, we'll dive into the question, why might Bitcoin continue to rise over the long haul? We'll keep our explanations clear and accessible, showing you exactly how and why Bitcoin might have remarkable growth potential. Moreover, we'll share highly confidential information unique to this video, giving you a fresh perspective on current investment timing and what the market could do next. By the end, you may find yourself itching to pick up some Bitcoin right away. Let's jump into the main content. Let's jump into the specifics. The immediate catalyst for the recent surge in altcoins and crypto-related stocks was former President Trump's 90-day tariff suspension. With U.S.-China trade tensions temporarily easing, global market anxiety has softened, particularly for industries tied closely to Chinese markets. Investors shifted into risk-on mode, pouring funds into altcoins and high-volatility assets. However, once this 90-day grace period ends, there's a strong possibility that tariffs and broader trade issues could re-emerge. Companies heavily reliant on global trade and exports stand to be the first affected if tensions flare up again. Anticipating such a scenario, many large investors and hedge funds are already asking, where should we park our money if geopolitical conditions deteriorate? Increasingly, the answer is Bitcoin. Known for its independence from central banks and governments, Bitcoin is gaining traction as a potential safe haven if U.S.-China friction resurfaces. Over the past few years, Bitcoin's reputation among major financial institutions and institutional investors has risen considerably. Once dismissed as a speculative fad, Bitcoin is now included in the portfolios of certain hedge funds and even pension schemes. In times of inflation or dollar instability, Bitcoin is often discussed alongside gold as a new safe asset. Why did altcoins react more dramatically than Bitcoin this time around? Altcoins tend to have lower market caps and are often driven by speculative capital aiming for quick profits. A piece of news as impactful as the 90-day tariff suspension can cause money to flood into altcoins, skyrocketing their prices. Bitcoin's movements are comparatively subdued, but it has been cultivating a reputation for more steady growth over the long term. There's an emerging consensus that Bitcoin may be less volatile than altcoins and better at preserving value over time. Our AI-driven data analysis reveals that major institutional investors have been running scenarios on where to move their capital should U.S.-China tensions re-escalate. Alongside traditional havens like gold and government bonds, Bitcoin is making the list more frequently and with an increasing allocation in certain portfolios. The core idea is that in an age where fiat currency can rapidly lose value due to conflicting monetary policies, Bitcoin's borderless nature can serve as an effective hedge. In this sense, while the tariff suspension may have fueled a short-term boom for altcoins and other high-risk assets, it also underscores Bitcoin's longer-term advantages. If, after the 90-day window, trade tensions reignite and the global economy becomes more unstable, investors could pivot away from high volatility Altcoins toward what many now see as a safer bet, Bitcoin. Historically, whenever geopolitical or financial crises arise, demand for Bitcoin tends to increase, often resulting in significant price hikes. So what are the concrete signs that Bitcoin could be primed for another major surge? One critical factor lies in the policy dilemmas faced by governments and central banks worldwide. Too aggressive interest rate hikes might contain inflation, but hurt corporate growth and consumer spending, ultimately shaking stock markets. On the other hand, lowering interest rates risks stoking inflation and eroding fiat currency value. Either way, more investors are motivated to seek refuge in alternative assets like Bitcoin. Additionally, US-China tensions aren't the only geopolitical risk. Europe's economic slowdown, Middle East conflicts, and debt crises in emerging markets all add to a sense of global uncertainty. In such an environment, Bitcoin's ability to move seamlessly across borders gains even greater appeal. Indeed, a growing number of major funds report holding Bitcoin as an emergency fallback should something go wrong. Skeptics might say Bitcoin has experienced massive crashes before it's still extremely risky. True, Bitcoin's volatility hasn't disappeared. However, institutional players have watched Bitcoin recover from repeated downturns to reach new all-time highs, reinforcing their belief in its resilience. According to confidential intel we've gathered, some European and American funds plan to double their Bitcoin holdings by 2024, partly in response to concerns about US-China relations and the dollar's future stability. If these strategies materialize, a significant wave of buying could push Bitcoin's price even higher. And while the hype around altcoins may subside after the 90-day window, this latent demand for Bitcoin might remain strong. Ultimately, the altcoin rally we're seeing now could just be the tip of the iceberg. Behind it lies a more gradual, steady accumulation of Bitcoin among institutional players. No one can predict market movements over the next 90 days with absolute certainty. But a key question is, once the initial excitement fades, where will all that capital go if another U.S. China standoff or global inflation concerns ratchet up the risk? A scenario in which Bitcoin captures significant investor attention and sees notable price gains seems entirely plausible. In this episode, we trace the surge in altcoins and crypto-related stocks stemming from the 90-day tariff suspension, then shifted focus to Bitcoin's potentially bright future. While the buzz initially surrounds altcoins' rapid price swings, the real question is what happens once the excitement cools down. Much like institutional investors meticulously planning their next moves, we should also look beyond short-term volatility to consider Bitcoin's longer-term potential. The insights we shared today include highly confidential hints gleaned from AI-driven research. While the market is captivated by altcoins and crypto stocks, there's evidence that Bitcoin is quietly being accumulated behind the scenes, rarely highlighted in mainstream coverage. If that trend picks up speed, Bitcoin could experience a rapid breakout when sentiment shifts. Of course, there's also the possibility that global economic conditions worsen once the 90-day suspension ends. In that scenario, the top safe haven candidate for many would be Bitcoin, given its track record of rebounding from major crashes and consistently pushing to new highs. This resilience sets it apart from other cryptocurrencies. If you started off thinking it's odd that altcoins are surging just because of a tariff pause, we hope you now realize the bigger opportunity that Bitcoin represents. We'll continue leveraging AI to track emerging signals and deep market data, sharing insights into the hidden aspects of crypto that few are discussing. Thank you for watching until the end. If you're feeling more intrigued by Bitcoin or want to dive deeper into future market shifts, stay tuned for our next video. We'll build on today's discussion with even more advanced insights. As the crypto space evolves, having fresh perspectives and spotting the right timing can be game changers. Perhaps it's time you took that first step, and we hope this overview offers valuable guidance for whatever you choose to do next.